Good day, fellow deal makers. Welcome to the Deal Scout. On today's interview, we're going to have a conversation about investing and maybe your values, maybe philanthropy, or maybe a mission that you feel that God's given you, and maybe how to connect those two. So, with that, I brought Mr. John on, who does this for a living, and I figured we might as well talk to smart people and ask what they do, how they do it, so we can learn and grow as a community of deal makers. John, welcome to the show.
Yeah, thanks so much for having me, Josh. Excited to be here.
Yeah. All right. So, John, what is it you do?
Yeah. Well, my day job, I'm the co-CEO of a firm called Sovereigns Capital, and we're what we term a faith-driven investment firm, meaning we invest along a variety of asset classes in the public and private equities, but we do so in a way that positively incorporates the principles of our Christian faith. So when I say faith-driven investing, we're aligned dominantly with the principles of Christianity, and we try and invest in such a way that we can perform at market, but also incorporate the principles of that faith in a way that we think creates human flourishing.
Hmm. So perform at market. So we're looking for metrics, and just because it's a Christian
Yep.
organization or faith-based, we're not going to, you know, take a hit or try to
Yep.
focus on something that's just purely philanthropic. How do you
Yep.
how do you mold those two? Because sometimes they might not line up.
Yeah. So we thus far have focused exclusively on non-concessionary investing. So, if you think about this spectrum of values-based or impact investing, on one end, there are what I'll call concessionary strategies, even quasi-philanthropic strategies, which can be the right approach to certain things. People are invested, for example, in charter school bonds. Those may have a slightly below market return, but they feel really good about forwarding public education with their fixed income portfolio. That's excellent. We try and focus on creating really good private equity venture real estate products that perform. Our aspiration is obviously always to be a top quartile performer for that asset class. Obviously, that looks different between public equities, private equity, real estate, but we want to be top quartile for the managers in our particular segment and also incorporate the principles of faith alongside that strategy in ways that are differentiated. So, what that can look like, for example, investing in companies is to try and find companies that will not just outperform and have faith integrated, but outperform because of the cultures that they've created. We think that culture is the greatest competitive advantage in business, and great cultures tend to outperform. A lot of the mainstream research from McKinsey and Company, London Business School, and others have confirmed that great cultural institutions attract talent better, they retain people better, they attract customers and vendors, and end up outperforming. And so we're looking for really outperforming companies that have also built cultures that show a love of neighbor and human flourishing within them. And we think that that's not just a way of marrying those two things, but that actually one can be supportive of the other, that those great cultures can actually reinforce the foundation of their outperformance.
Yeah, I'll tell you, this is super interesting and super timely. I'm reading through a book called The Steward Investor, and
Yeah.
it talks about, one of the principles is, voting with your dollar, and you have your mission driven side, my philanthropic arm. I got a donor advised fund, and I give to missions, but I have a mission in life that I want to accomplish. Why not do that through my investment dollars as
Yeah.
well if I am able to? How in the world do you go about looking for Christian groups to invest in? Because, I mean, it's polarizing in the world that we live in today, 2024, as we're recording this, and waving a Christian flag saying we're looking for Christian businesses to invest in. I'm sure it puts a bullseye on your back. How do you guys do it?
Yeah, we've actually been very encouraged by the support for the process that we've outlined. So, like you said, a lot of people don't think about activating their investment capital for their mission, right? For their personal values. We try and line our work up with that. We certainly try and line our giving up with that, even though giving is only a couple of percent of our portfolios. But for most of us, our invested capital is actually the biggest pool of capital that we have, whether that's our 401k plans or our cash brokerage accounts or private investments. It's actually the biggest capital we steward, often a lot bigger either than our annual paycheck or than our giving. All right.
Hmm.
And yet it's the area that we activate the least. And so that's one reason we're so fired up about it. The way that we've defined it is it can be a very divisive environment. We think there are a lot of principles embedded within Christian faith that are actually pretty broadly acceptable to people, but still meaningful. So our mission as a firm, for example, is to love God and love our neighbor through investing. For those who are Christians, that's the great commandments. Jesus had two great commandments, basically: love God and love your neighbor. And we think that both of those are possible in the context of people doing work well. And rather than focusing on negative screening, which is where a lot of Christian investing has focused previously, and we don't invest in certain categories. So you won't see us investing, for example, in adult entertainment, pure play alcohol or gambling, things like that, that we typically wouldn't invest in because we need to see a redemptive product or service. But we define that very broadly, right? Whether that be fire trucks or healthcare or any number of categories could fit that. They're doing good for others. And we want to focus on investing alongside leaders who have been very thoughtful about embedding those principles in their companies. What does that look like? We love to see multi-faith chaplaincy and mental health resources in companies. We love to see family-friendly policies for family formation, whether that's maternity and paternity leave benefits, adoption benefits, on-site daycares, things like that we see our CEOs promulgating. We love to see the implementation of things like employee benevolence funds, which is where, a company or a GP in our case may seed a fund, almost like the old church benevolence funds that are available to employees in crisis who don't have financial resources. And then those funds are taken over by the employee base, helping one another, right? So they kind of fund this and it's available to their fellow employees who are at risk. So there are all these things we think you can bake in alongside a great mission, vision, and values, alongside the effective delivery of a product or service that we think just create the types of cultures that do show a love of neighbor, that help people to leave work at the end of the day better than they came. And that's our focus. And so when we focus on that, it's very rare actually that we encounter a lot of division, right? Because if you can show people you love them through the work that you do, even when you're making hard decisions, in our companies, in downturns, we've had to do layoffs, and instances of underperformance, your company will have to confront someone for their underperformance. And yet, if you can show consistently that the company does care about its people, its customers, and others, we think that you're building the type of place that reflects our most deeply held values and does so in a way that hopefully can outperform their peers.
Here's a tough question for you.
Yeah,
The you have a situation where someone's underperforming
yeah,
or tough times, right?
yeah.
We've seen economic downturns. I've been in the game long enough to have gone through a few of them. How do you do that and still show the person that you love them?
Yeah.
Because that's a challenge.
Totally. Look, every context is different, right? It's different depending on the person, the performance challenge, the situation. I think in general, you always want to be as transparent and communicative as possible. You want to do that along the way so that, particularly, in the case of performance, you never want something to be a surprise to someone. You want to have invested in them, tried to turn it around, really made the effort such that you've tried to help that person be the best that they can be. And honestly, if they're not performing in that context, it could be that they're just better suited in another context, and you're not doing them any favors for you or for the company. You got to keep the company alive. You got to make it profitable. You got a lot of other employees to look out for. You've got to be transparent with them about the lack of fit, and then be as generous as you can be on the other side. And that would be in the case of a layoff or something as well. In the case of layoffs, it's often a difficult circumstance because the company may be pressed for money. You may be struggling to stay alive. But in general, you want to default to being as generous as you can be with exiting employees, both in terms of the way that you do that, just the way that you treat them personally, but also in terms of financial assistance that you can provide on the way out, et cetera. And again, that looks different depending on the context. We invest in a lot of startups. Startups often do not have a lot of excess cash, right? I mean, it is, one of my partners calls it a knife fight in a phone booth, right? Like, you're trying to stay alive every day. And so there may be limits to what you're just able to do while trying to keep the thing running.
Yeah.
Some companies are bigger. They're in better situations where they're able to do that well. And so there's not one prescriptive approach to that. I think it's a mindset of always trying to be transparent with that person, trying to keep their best interest in mind, even when you're making difficult decisions, and then defaulting to being as generous as possible within the constraints of the circumstance.
Yeah. What do you think is the hardest part about being a Christian business leader, a Christian investor,
Yeah.
a Christian GP? What is the hardest part of kind of marrying these two worlds? Because for a long time there was this just, oh, you're either in the ministry
Yeah.
or you're in business, right?
Yeah, totally. And most people really are not in a quote unquote Christian company, right? There are very few of those. Sovereigns, because it is a faith-driven investment firm, is a bit more like that in the sense that we have a particular strategy that almost has a missional component to it explicitly. A lot of great businesses run by Christians are exactly the kind of businesses you encounter every day, right? It's Chick-fil-A, it's Movement Mortgage, it's a bunch of other companies on your street, right? Where you may go to the hardware store. It may be run by a person who's a member of your church, but it's not a Christian business in the sense that the product or service it provides is oriented that way, if that makes sense, or that all the people are there. Um, I think in that day-to-day context, a lot of it is never concealing who you are, your motivations. So I think as a Christian, as any person, you should be open about where your values come from, about what motivates you, about how, right? And in a way that, at least the way we conceive of it, reflects the values of your Christian faith. And I think those are values that are often kind of very broadly accepted. They're not always lived out in business. They're not always lived out in finance. One might venture to say they're not often lived out in finance in my world, but because they aren't, you have this opportunity to be totally different, right? And I think that just being extraordinary, one of our core values as a firm is that our excellence is a witness, meaning a lot of Christian stuff ends up being kind of Christian first and then second rate, right? You try to get the pity vote, so you kind of label it Christian. It's not very good, but you're hoping someone will sign up because they share your faith. We don't want people to be faced with that decision. Like, we want to be better than our peers, and we think that excellence is something reflected throughout history. I mean, if you looked at the great artwork of the Renaissance period, if you look at the Sistine Chapel or the Statue of David, the greatest artists of that time were Christians who are orienting their art towards that. And we think that we can be exceptional craftspeople in the work that we do, and that that's one of our first callings in business, and that the way we behave and the way we conduct business should reflect the faith that we espouse, right? And that's imperfect. Like, you always open yourself up to charges of hypocrisy when you do that, because no one lives that perfectly at all, right? We're all very, very imperfect. But that's part of it too, is like acknowledging, hey, I'm doing my best, but I'm going to mess up. I've got a temper. I've got, all these problems that make me just as imperfect as anybody else. But my aspiration could be different, and my values that I'm seeking to achieve could be different.
Yeah. I heard this analogy of, you can't judge, Jimi Hendrix guitar off some drunk guy trying to play at a bar who's never played guitar before,
Yeah.
right? So here, being a professed Christian, we're going to make mistakes, but that doesn't reflect purely what the work
Yeah.
that Jesus did, right? So like, we got to give each other a little bit of grace. We're going to make some mistakes going
Totally.
away, but this is what we're aspiring to accomplish. Do you find that when it comes to returns, the investors are looking for a return? Do you think that expectation of being Christian lowers the expectation of return? And that might be a really tough question, but
There is an assumption that it will. Like,
yeah,
when you say, hey, we're going to do this in a way that's faith aligned, I think most people assume that means that they're going to have to trade off some return. Past performance is no guarantee of future performance. Investments are hard. Nobody bats 1,000. I mean, these are all, as an investor, you have to get used to telling people, like, look, I mean, the best investors in the world, not everything they do works, right? Warren Buffett he's not batting 1,000 either. He's done pretty good, but most of us are, so all investors are going to have imperfect, but we are aspiring to market or better returns, meaning, our goal is to break that perception that in order to align your values with your investing, you have to make a concessionary trade-off. And we are really aspiring to run these companies and funds in a way that returns better than our peers, right? In the mainstream investment world, that's what everybody's aspiring to. Everybody wants to be top quartile. Not everybody can, by definition, right? Maybe top quartile is 25%, top decile is 10%. Not everybody gets there, but everybody's kind of very transparent about aspiring to that. And that is our aspiration. We want to do that in a way that's very faithful, but we don't actually think there's going to be a tension between those two. There's a tension sometimes. I'll give you an example. There are probably certain practices in private equity that we're reluctant to engage in that might get us from where we are today, even higher performance. So I often talk about top decile. A lot of times funds, not always, a lot of times funds that achieve that are using a ton of leverage, for example, a ton of debt on their businesses in a way that could potentially impose unnecessary risk from our point of view. We tend to use a more moderate amount of debt in our portfolio as a general concern. We don't use none. We use some because that's a way to enhance return, but we tend to be more moderate. Does that mean in certain circumstances we're trading off a little additional return? Yes. We also think that it lowers our risk profile a bit and that there's a good investment rationale to do that. And we also think that it helps us to live into this cultural strategy, this growth strategy that we have, because it's less common for us to be hampered by the amount of leverage on a business in a way that would prevent us from investing in those things that I mentioned, right? That can build a great culture. Not no times, right? Because businesses can struggle, but less often than someone who were to use it more aggressively. And so that might be a practice, for example, where we think a little bit more about the risks involved in it. But as a general matter, in growing a great company, and we don't do distress for control typically, we don't do bankruptcy, sales, things like that. We're typically investing in growing businesses. We think you should be able to keep up with your peers if you operate them well, if you build great cultures, if you invest in people, and if you choose wisely, right? You pick a good industry with a good competitive mode, all the kind of financial characteristics that you'd want.
What is your role in the organization?
So I'm the co-CEO. There are two of us who run the firm. I joined about 4 years ago. My current partner as CEO, is one of the co-founders.
Mhm.
And then the way we structure our firm is that we have investment teams led by dedicated investment professionals for that specific asset class, like private equity or real estate. And the two of us who are CEOs kind of sit across those different strategies and help out. We'll source deals, we'll sometimes help on them. We sit on our investment committees, but we're really responsible for kind of leading the firm overall.
Yeah. What do you think is your superpower? You stepped in 4 years ago. And you're like, I looked at your background. You're like, here's how I could bring my background to help serve the internal company, but also the portfolios of companies that you're investing in.
Gosh, that's you know, it's a question that's good to ask people. It's always hard to answer about yourself.
Yeah.
I think where I can be most helpful, where I have been most helpful to the team, I think I can help to set a vision and direction and then build an institution behind it. Meaning, a lot of people can kind of cast a vision. And I'm fortunate that my co-founders, or the two founders of the firm, my co-CEO, they really set a vision that I was able to become a part of in terms of this idea of faith-driven investing. And then together we've kind of set a new vision for what that can look like for our firm.
Mhm.
And then one of the challenging things that some people have a tough time with is then building the infrastructure behind that, the talent, the client base, the
Sure.
brand, all the things that go behind it. But the ability to build that institution is what helps you to achieve that vision. And so I think that's something that I've worked hard to do over my career is how do we set a vision that's achievable, communicate it with clarity, and then put all of the infrastructure behind it to make it a reality.
Yeah. Now you're also an author. Tell us about your book and how'd you go about writing it?
Yeah. So I've been an author since I was a little kid. I mostly do it as a side gig now.
Yeah.
So I've authored 4 books to date, I think. Dominantly, it's been nonfiction. On the nonfiction side, my publisher these days is a group called Harvard Business Review.
Mhm.
And the most recent book that I wrote for them was a book called The HBR Guide to Crafting Your Purpose. So if you know HBR guides, like when you go to the airport and there are little newsstands with the HBR guides on them, I wrote their guide to purpose and meaning. That came out just a couple of years ago. They've actually got me working on a new book now on money. So we're going to write about how money can be a good thing rather than a bad thing in your life. Christianity says the love of money is the root of all kinds of evil, but most religions and philosophic traditions basically have the same view of money. They say it's not necessarily a bad thing inherently, but its misuse or the love of it is a bad thing. And so for someone who's investing, who's earning money, who's spending money every day, how do you make that good in your life? So I'm writing a bit about that now. And then I do have one novel out that's a book on miracles that I published about 18 months ago. That's a bit different as well. That was my first novel. So most of it's nonfiction. The next book is nonfiction, but I love writing because I'll often use writing as a way to learn. Like if you see me write a book, it's often because I feel like I don't know enough about that topic and I want to really order my thoughts behind it. And there's nothing to get you more prepared on a topic than writing a book about it because you really have to dig deep. You have to interview others, and it's just a great way to process your thoughts.
Yeah, it really is because you've got all of these ideas and you have to turn it into 12 chapters or 18 chapters,
Totally.
and it's very hard. And then you have to go, okay, I have to communicate this at a high school level or lower. And then, okay, if I can't articulate it, I don't understand it. So there's a
Yes.
lot of work to write a book. Um, I do want to talk about crafting purpose and meaning because I think
Yeah.
it's important for investors to have that in their own life. Investors, entrepreneurs, founders, but businesses in general. But I got to ask about belief systems. You wrote a book about money, and you mentioned, the love of money is the root of all evil.
Yeah.
Growing up as a Christian, I heard money is the root of all evil. And if you have that
Yeah.
belief system, what will you do with money? You'll get rid of it as fast as possible.
Yeah.
You'll avoid it. Here's some belief systems I want you to maybe crack
Yeah.
that maybe a listener might have. Money is evil, or
Yeah.
money's the root of all evil, which is the Bible says the love of money, but also that it's ours, right?
Yeah.
If you're a Christian, and then that there's a scarcity mindset also attached to
Yeah.
a lot of belief systems. So maybe you could pick one, or you could kind of hit them all
Yeah.
and share about it.
Yeah. I think a lot of trouble arises when we confuse money as an ends, not a means,
Mhm.
or when we are confused about what it is a means to, right? So the Bible, and this is true in the Quran, it's true in Buddhism, it's true in a lot of philosophic traditions. Um, Most religious and philosophic traditions don't view money as inherently good or evil. It's just one of many things that you can be gifted, that you can choose what to do with. An example of that in the Christian faith, in the Old Testament, for example, a lot of the patriarchs of the Old Testament were the wealthiest men of their era and weren't criticized for that, right? So Abraham was one of the wealthiest men of his time, and he actually used that wealth to build a nation. That's what he was called to. God gifted him with that wealth. On average, he used it well. Again, all of the one of the unique things about the Bible is all its characters are flawed. Maybe not totally unique, but it's good literature for that reason. Um, and my point of view on money is what I do think is it's a uniquely tempting thing. And the Bible warns about that consistently. Money and a few other things are uniquely tempting, and the chances that we use it wrong are high, right?
Yes.
It is, and for that reason, I think it's a danger there is danger to it that you need to watch out for, right? That said, God gives people money sometimes, right? David was wealthy, Abraham was wealthy. There were rich characters in the New Testament who actually used their wealth in a way that benefited God's kingdom. Jesus told the parable of the talents, which was broadly about gifting, generally, I think, but the context was money specifically, right? And he actually rewarded the servant who was able to return more money to his master in that parable. And so, what I think about money is that it is sometimes gifted to people. You do have to have this mindset that it's not yours, right? That it is a means that's to be used for higher purposes. Doesn't mean you have to be a pauper either. Like I have got my iPhone here. I've got a nice office here. I dress, I have clothes on my back and
You
a
look sharp, man.
decent
You look
house.
you look great.
Well, I wasn't claiming that, but like, look, you don't have to be a pauper. This is not to say that, but that by and large, you think about the way you use your money for charitable purposes, the way you steward that through your investments, through your spending, the values you teach your kids. And it really is God's, not yours, meaning that you're there to steward it for another generation and to try and do good things with that. If you have that as your mindset and you're actually seeking discernment about that, then I think the chances that you could use it well are high, right? And then some people learn that they can't be trusted with money. So it's just like some people can drink a glass of wine and it's not a problem, and some people are alcoholics. I would say some people learn that greed is just too great in them and they need to set clearer boundaries around money. And
Mm.
some people are better equipped to deal with it, I think, right? And part of that is just a self-discernment. Like I was recently reading, so I have this Substack called On Purpose,
Mm.
and I wrote about wisdom recently because I was writing a chapter in this book on money, and it was thinking about this means versus end thing because I was talking to a guy named Tyler Vanderweel who runs the Human Flourishing Project at Harvard.
Hmm.
And financial health is one of their 6 categories of human flourishing, but it's different than the other 5 in the sense that it's not an end of itself. It's an enabler for the other 5 things, right? So we were thinking about means versus ends. And I was reading the story of Solomon in First Kings, where God offers to give Solomon anything. And he asks for discernment and judgment, wisdom, basically. And then God, after he asks for wisdom, gives him wealth and power. And it was striking me just how that order is precisely the right order.
Yeah.
Like God can trust us when we've actually sought wisdom and discernment from him, but he wouldn't give us money without wisdom because it would be destructive. In the context of wisdom, it can be a thing that's used for good, even though it remains uniquely tempting for the rest of your life. I mean, Solomon was ultimately um, led astray on other fronts first, but by some of these gifts he had been given. Um, but it was that initial ask for wisdom that allowed him to be prepared to take on some of the blessings that God was going to offer him.
Let me challenge that a little bit. Solomon didn't grow up a pauper. He was the king's
He
son.
was not a pauper, no.
Yeah,
No.
David was wealthy, and so he was
Yeah.
born into great wealth. There
Yeah.
was a lot of family issues, brothers trying to kill each other for the throne,
A
and a bunch
few.
of stuff
Yeah.
going on, right? But he saw this. Do you think it was out of his scarcity mindset or maybe insecurity that he asked God for wisdom? Why do you think he asked God for wisdom? Because he had some money, he was probably okay. His kids were probably okay. But what do you think was the thing where he goes, you know what? I got this. I don't want to say genie asking me what do you want, rub the lamp and get what you want, but God said, what do you want? He said wisdom. Why do you think he really answered that?
I wonder, it's a great push because you're right. I kind of oversimplified the story a bit. Solomon did not grow up a pauper. His dad was the king of Israel. I wonder if it was because growing up with wealth and power, he saw how uniquely dangerous they were.
I think so
I
too.
wonder if it was precisely because he understood the dangers of everything that he was inheriting, that he knew he would need wisdom and judgment, discernment and grounding in order to steward those well. In the non-Christian world, it reminds me of Marcus Aurelius, for example, right, who followed Stoicism precisely because he felt that it grounded him in a way that he was a servant of the people and that he had a value system that could resist some of the temptations of wealth and power. And so I wonder if for Solomon, it was kind of like, hey, I see, I see what can happen, in a court. I see what can happen when no one can challenge your power. And I see how that can go wrong, not just for other people, what a ruler without any constraints or values can do to others, but what it can do to a person when they're unconstrained, when they have power and wealth with no constraint. And maybe it was because he had witnessed that he sought discernment.
That's a
It still
great
went
point.
wrong, by the way, at the end of his life. It still went wrong. So
Yeah.
there's a lesson in that.
God used it to build the temple, right?
Yes.
And he used it for some good purposes, but he also was building temples of other gods. And he liked to spread his money around with a bunch of concubines. And, he had a whole group of people who followed him around in his crew. You mentioned self discernment,
Yeah.
knowing thyself to thine own self be true, and knowing yourself, like, am I actually good at money or not? And I think there's a fine line between self discernment and self deception. When it comes to money, how do you have a sober assessment of that? Because sometimes if we make money or scratch off the ticket and we have a lot of
Yeah.
money, we tend to think that we're better than we are. How do you help clients have a sober assessment of finances?
It's a great philosophical question. One thing as we get into these discussions, I love to remind people is it genuinely is much harder to be poor than rich. So I want to start with that acknowledgement. Like, when I was born, we lived in a single wide trailer in Central Florida, and like, even by global standards, we were pretty well off. Like, it is. I spend a lot of time with reasonably well-off people, and we talk about all the problems with money. And I will say the biggest problem most people have with money is they don't have enough of it to provide for necessities globally. So
Yeah, for sure.
before we go down the path of kind of all the problems with how to manage too much money, it's worth acknowledging, like, it is much harder to be without the ability to take care of yourself or your family. And a lot of people are in that situation. For those blessed to be in the situation of having abundance, of having more than they need,
Yeah.
um, I think just like with anything else where you can abuse something, like alcohol is not a bad analogy, I think, in the sense that I don't think alcohol in and of itself is a bad thing. Jesus turned water into wine, in the New Testament was pretty prominent, but they were also very clear that wine could be abused, and we've all seen that it can lead people astray, right?
Yeah.
Um,
I've heard. I'm
yeah,
just kidding.
I've heard,
I've done
yeah.
it.
And
Yeah.
there are signs that that's happening. If you're thinking about it too much, if you're using it to deal with your problems,
Yeah.
if you're drinking to excess, if you lose control of your behaviors, and in some of those circumstances, you either have to rein it in a lot or even just cut it off entirely, right? Like one of the transformational pieces I read was by a business school professor that I got to know when I was in business school, named Clay Christensen, and he wrote an article once called "How Will You Measure Your Life?"
So good.
And one of the principles in the article, later a book, is that it's easier to do something 100% of the time than 99% of the time. And what he meant by that was he was a Mormon who observed the Sabbath. And when he was younger, he played basketball, and the basketball games were on, I think it was Saturdays or Sundays. I can't remember which he was observing. And he was tempted to play in this playoff game. And he ultimately decided not to, because he said, you know what, if I make an exception now for this playoff game, there are going to be way more important things later in my life. There's always going to be an exception. But if I hold the line and say I'm never doing it, then I'm not doing it. A lot of alcoholics are holding that line, right? They're saying it's not, I can't be trusted. I have a friend who's a very wealthy guy, and his business is quite successful. He realized that he's uniquely tempted by greed. He's uniquely tempted. He's a super competitive guy, um, to want money, to be inclined to kind of try and get more of it, to confuse it in ends instead of a means. And so what he did early on was he prayed about it, and he capped his net worth at a really low level relative to what it could have been.
Mhm.
And he just said, this is it. I'm done. This is the most I'll ever have. Everything else goes to charity, and set up a foundation or a series of foundations to do that. And that freed him from ever having to make decisions about those temptations.
Mm.
That's not the right idea for everyone. I do encourage everyone to pick a financial finish line so that you're not chasing something on a treadmill. But that for some people, that's less. For some people, it's more. Some people can use that well. Some people can't. So I never try and prescribe a number for people, but to pick a financial finish line. And I think you have to learn the signs in your own life that money is controlling you. You're not controlling it. And try and pick the right lines for you to set parameters around that, just as you would with alcohol, just as you might with gambling. Like, I'll go play a pickup hand of poker with my friends sometimes, but I don't go to casinos. Some people are addicts on that stuff, right? And a friendly game of poker isn't friendly. And so everybody has to learn what their limitations are, what they're uniquely tempted by. And I do think most people don't think of money in that context, but they should.
Yeah. What a absolute privilege it must have been to have Clay, as a
Is
as,
awesome.
yeah, the Innovator's Dilemma was a great put together. Didn't he write How Will You Measure Your Life, or was that someone else?
That's what he wrote. Yeah, the article, it's, I think, the most read HBR article ever. How will you measure your life?
Yeah.
They actually, when they originally wrote the magazine article, this is a fun, humbling tidbit. So I write a lot. I write for HBR a lot.
Yeah.
The number one thing I still get emails about is, in that article, in the print edition, on the online version, it's gone. They interviewed a couple of students and put little quotes from students in at the time. And I had one of the little quotes there, in the article. And I would get more emails and text messages about that little quote in Clay's article than I got about all the dozens of articles I had written, which
Yeah.
was a really uniquely humbling experience. It was a very, very good article, and everyone should read it. He passed away recently, but he was a remarkable, remarkable man.
Yeah. One question that I'd like you to post to your friend and maybe report back in, or maybe I get a chance to ask him one day. Having a ceiling for me as an entrepreneur like I would fear, and this might be a improper
Yeah.
assumption, that I would lose my ambition. Like there's
Yeah.
something in me that, I've got crazy goals that I wrote up on my board. So if I capped myself, like how do you keep going? Because I'm competitive. I want to win. I want to do big
Yeah.
things for God's glory. And how do you think he does that? Well, how do you think he would answer, or she?
Yeah. Well, I'll talk about one. I won't put words in his mouth, but his story is available publicly. There's a different guy named Alan Barnhart. If you've ever heard of Alan, Alan runs a crane company,
Yeah.
which doesn't sound exciting, but produces a great deal of profits.
Yeah.
And he's done the same. He's basically gifted his company into a charitable foundation that gives away money to gospel-oriented causes effectively. And what I would say is, and again, this is not prescriptive because everybody's number is going to be different. Everybody's approach is going to be different. So, like, don't hear this as judgmental. My choices are going to be different than any of my friends' choices. Um, I'm a super competitive guy. Like, I kind of right now, I think I want to go out feet first. Like, I'm not sure I ever want to stop doing something,
Yeah.
and I am motivated. I want to win, just like the next guy. You can do that for things other than yourself, right? Like it could be that you put all the excess into a donor advised fund or a philanthropic foundation. And when you're winning, the causes you care about are winning, that you're able to see the kind of rewards for what you're doing grow in a way that you can help to distribute to others around the world, right? And so most of the people I know who have picked these financial finish lines don't, it's not like the Reddit like fire forums where it's like you just go play golf. It's more about, for a lot of these guys, it's more about, when do I stop earning for me and cut it off and start earning for others? And instead of hanging it up, they actually work just as hard. It's just funneled into the causes that they care about and into other people.
Yeah, that's interesting. I would love to see a study on that, or I'd love to like dig into some of those stories with the people
Yeah.
and find out in your mentality, right? Because I think Jesus even said, he said, "Seek first the kingdom of God and His righteousness," right? Like so,
Yes.
as you switch your mindset towards accumulation
Yeah.
to earning for others or earning for these causes, still having your, hey man, I like hats, right? So
Yeah.
let's go
It's a
earn
good
some more
hat.
money. Thanks, man. I like you, right? I think that it's good for me to have that motive, that drive. We got an RV and it's fun, it's family. Like, but
Yeah.
I want now a Class A versus a
Totally.
travel trailer. So I'd really love to dig in with you and with some of these guys, maybe on future episodes of how do you how do you create those, and what's too much, what's too little, what's a good financial finish line to create
Yeah.
1 billion, or maybe you don't need a billion. So like maybe that's something that we could stew on and come back at a later date. But let's do this for people who want to connect with you,
Yeah.
buy some of your books, learn more about you, take a look at Sovereign's Capital. What's a good place for people to go connect with you and learn more?
Yeah. If you're curious about the books, I have a website, johnwilliamcoleman.com. Pretty easy, johnwilliamcoleman.com. You can go there. The books are there. There's a contact form if you want to reach out to me. And there should be a link, I think, to my newsletter. I have a Substack newsletter I write about once a month. If people want to check it out. So that's for the personal side and the book side. And then on the professional side, I work at Sovereign's Capital. We have a website up, so sovereign'scapital.com. And there's a contact form there as well if you're interested in the investment side of things.
I'm sure during this interview, there's a question I should have asked you that I screwed up and did not ask you. What question do you wish I would have asked you?
Oh gosh, one thing we could circle back to that you talked about was this idea of like, how do you implement values in your investing? Is it going to be concessionary? Like, how do I think about how divisive it is? One of the things that tends to stop people from going down the road of trying to invest in a way that's according to their values. And a lot of the world has been doing this for a while, right? The ESG movement sprang out of this. There have been other affiliates of that. The modern activist investing movement was actually kicked off in, I think it was 71 by the Episcopal Church, who opposed GM's apartheid policies in South Africa, right? So it was like the church has a long history of being involved in these sorts of things. What we like to say is don't let the perfect be the enemy of the good. A lot of people look at their portfolio and say like, gosh, I got T-bills, I got stocks, I got all this other stuff. Like, what am I supposed to do to align all this stuff?
Mm,
And what we'll tell people is like, don't worry about aligning all of it. align one thing, take a first step, find something that you feel could be a positive way to implement your values in your portfolio, test it out. And then if that works for you, and as you get good at that, try another thing. See if there's another thing that really suits your values. It takes the pressure off to say, like, gosh, I got this whole retirement plan. What am I going to do? To say, don't worry about that for now. Like, start to get immersed in this ecosystem and figure out one thing that might work for you and take the first step, and then worry about the second and third step later. And so we didn't talk about that explicitly, but I find that's the holdup for most people, is just like, this is too overwhelming. I don't want to have to think about it. I just want returns. I'm going to put it in a, spider fund or whatever. And my point would be, that's great. Pick one thing that might be interesting to you that you could do outside of that, or one way in which you could kind of incorporate values in your portfolio, and see how you feel about that thing. And it could be that you have fun doing that and it's interesting. You find a way to do that that's profitable, and maybe you do a second thing, right? But it takes the pressure off trying to convert everything at once.
Yeah, for sure. Well, fellow deal makers, thanks for tuning in today on the Deal Scout. As always, reach out to our guests, say thanks for being on the show. Go buy their books and learn more about them and connect with them and dig in. But most of all, say thank you for sharing your wisdom, your time. As always, if you guys have a deal that you'd like to talk about, head over to thedealscout.com, fill out a quick form, maybe get you on the show next. Till then, we'll talk to you all on the next episode. See you guys.
Thank you.